So for Tesla, we got their Q4 earnings. We already know about their production and deliveries. So their total production for Q4 was 494,989 cars. So that was up 13% year over year. And then their deliveries were 484,507 vehicles, up 20% year over year. So they're delivering more and more cars every year, Hamish, which is a good sign for a company that makes cars. So how did they go financially? Well, they had their revenue came in at about $25 billion, but this is interesting because it's only up 3% year over year. So yeah, not as much growth. Where's that 50% growth that Elon keeps promising?
I was just about to say 50% for the foreseeable future, righto? No, but I mean, I don't think it should be overly surprising that an auto business probably relies largely on a lot of people financing their vehicles being kind of impacted by rising interest rates. It's probably I'm sure plays some role in this. It's actually been surprising that their growth didn't slow earlier. For when I was kind of looking at Tesla, it was watching interest rates rise and they were still posting, and up until now, I think they've still been posting really, really strong revenue numbers. So
yeah, definitely. Yep, up until now. So yeah, so 25 billion was their total revenue. That's up 3% year over year. Their automotive revenue, which is the vast majority, came in at 21.5 billion. So that was only up 1% year over year.
Right.
So pretty flat. Gross profit was down 23% year over year in Q4.
Ouch.
Operating expenses were up 27%, and operating income came in at $2 billion, down 47% year over year. So people were not too happy about it. Their operating margin fell from 16% to 8.2%. They halved their operating margin. So Tesla go on to comment as to why these results happened. Some people were shocked, some people were not as shocked. So why did this happen? Well, they noted that the main factor in dragging things down was their reduced vehicle average selling price, due to their deliberate price markdowns, and also the mix of cars. They're selling more of their cheaper cars. They also had an increase in operating expenses, partly driven by AI and other R&D projects. They also had lower full self-driving revenue recognition year over year due to full self-driving beta, the wide release in North America, which happened in Q4 of 2022. So that propped up 2022's Q4.
Yeah.
They also noted that there was a big cost in the Cybertruck production ramp. And then on the positive side, they had lower cost per vehicle, so raw materials and logistics costs, that kind of stuff was cheaper for them, which is good. In fact, they noted that cost of goods sold per vehicle declined sequentially to slightly above $36,000.
Right.
So that's pretty cool.
Yep.
That's been trending down from about $40,000 over the past little while. They also had, obviously, on the plus side, growth in vehicle deliveries and also gross profit growth in energy generation and storage. So overall, the main reason, what I take from that is the main reason that operating margins have fallen so far is because of what they decided to do with their pricing. They decided to lower pricing.
Yeah, interesting. It is. I'm glad you included some of those details, because it is interesting to see that they were still able to lower the cost per vehicle despite some of the considerable cost pressures that the US has seen over the past couple of years, or the past 12 months. So that was really interesting to see, because that would have been my guess as to why margins declined. Was they've seen some kind of dramatic increase in the cost of their vehicles. But it's interesting to see kind of the breakdown of what actually happened.
Yeah, so in Q4 2022, the cost of goods sold per vehicle was about $39,500, Q4 2022.
Yeah.
So they've dropped that to, now just over 36,000, which is that's pretty decent considering you're making 1.8 million cars.
Yeah, and
it adds up.
That's a massive decline. Yeah.
Yeah. So and they keep iterating. That's part of their ethos. Okay. In terms of the other parts of their business, their solar deployed that reduced by 59% year over year to just 41 megawatts. So the solar business not doing so hot. They're saying that high interest rates, people just aren't buying solar right now.
Right.
Storage deployed, so there's grid scale storage and their power walls, that kind of stuff, increased 30% year over year to 3,202 megawatt hours. So that's exciting. The battery storage business starting to pick up. Also had a 25% increase in Tesla locations and a 27% increase in supercharger stations and 29% increase in the actual total number of supercharger connectors, the amount of plugs. So they're now up to 54,892 supercharger plugs around the world.
That's great.
That's quite a few.
Yeah, that's insane.
Yeah.
Wow.
After our scheduled global factory shutdown in Q3, our global production reached a record annualized run rate of nearly 2.0 million vehicles in Q4. The refreshed Model 3 with a significantly quieter cabin, ventilated seats, a screen for the rear seats, longer range and many other improvements is now available globally. So that refresh of the Model 3 has now come through everywhere. In terms of their market share data, I've chucked in a graph here. Their market share data continues to trend up in the US and Canada, also in Europe and also in China, which is good to see for them. In terms of operational data, in Q4, they released their latest full self-driving beta software version 12 to select Tesla employees and more recently to customers. Version 12 utilizes end-to-end training, enhancing the driving experience, and they note that it's basically a fundamental rewrite, replacing 330,000 lines of code with neural nets. So, yeah, quite a big step up there. They're on their second generation of their Optimus robot.
The robot.
What else?
Sorry, just on the robot. I saw that was the Tesla robot that was folding the clothes. Is that right? Did you see that video?
Yeah.
I thought that was kind of funny.
Yeah, I did.
Like imagine you just buy you're one of the first people to get one of these bots, and I don't know, let's say you get like a special early access, you pay like $1 million and it's just folding your clothes. Like that's what you're using it for.
Yeah.
It was pretty funny.
Yeah, I paid for $100,000 robot just to fold my undies. Oh wow, so good. Thank you.
Thanks, Tesla.
Can you wipe down the bench too? Yeah. Can you pick up my shoes? Man, $100,000 well spent.
Yeah. It's the robot mum.
Yeah. Okay. You're right. Yeah. Essentially. Okay, Hamish. This is where we get to the good part. What was Tesla's outlook? As we were talking before, their outlook up until now has been 50% compound annual growth, and they see that out into the foreseeable future. Well, guess what, Hamish? They've done away with that. Get rid of it. Maybe they were a little bit too optimistic. I know this blows your mind, Hamish. I know this blows your mind, but they might have been a little bit too optimistic. So they say our company is currently between two major growth waves. The first one being with the global expansion of the 3 and Y platform. And the next one we believe will be initiated by the global expansion of the next generation vehicle platform. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, as our teams work on the launch of the next generation vehicle at Gigafactory, Texas. In 2024, the growth rate of deployments and revenue in our energy storage business should outpace the automotive business.
Whoa.
So that tells you something.
Wow.
Yeah, that tells you something.
Wow.
So they have really reined in expectations for the next year, I think.
Yeah. So, sorry, you had this table here. So what did they in terms of deliveries, they increased by 20% in 2023. Is that right? Am I reading that correctly?
Yeah, in 2020. So hang on, I'll get the actual chart for the whole year. So in 2022, their total vehicle deliveries were 1.3 million, and in 2023 was 1.8 million. So they're up 38% year over year.
Right. Okay.
Yep, 38% growth in 2023. So even that misses their 50% growth.
Yeah.
But now they're saying, we're actually not even going to bother guiding for 50% growth because it ain't going to happen.
Well, I mean, it does just show how quickly things can change, right? It wasn't all that long ago that they were saying 50% for foreseeable future, and clearly their numbers, looking at their numbers, they thought that that was probably true, and maybe that will be true again at some point. Who knows? But it just
Mm.
shows how quickly things can change. But again, as I said at the beginning, it's
I
like
think it's also
not super surprising given the rate rises, I think.
Mm. I also think it's important to remember as investors that naturally, like we love this idea of consistency and like, oh, look, they got 10 to 15% growth and they've been doing that every year, for the last 10 years. That's amazing. It's so nice and stable and predictable, and that's great. But we also have to remember that in the real world, sometimes that just doesn't happen. Like, I have no doubt that Tesla will have future years where their vehicle delivery growth will again jump quite astronomically. But you just have to remember that how lumpy. You really have to zoom out and look over a sustained period of time for something like, a complex manufactured item like a car. Because while they're saying, this year might be down, we're going to be investing heavily and trying to ramp up Cybertruck, and we're also going to be working on our next generation vehicle. Once that stuff does ramp up, maybe in the next 2-3 years, then they will experience that massive jump up, but it'll just be lumpy. So you have to kind of think about less in the kind of fund manager mindset of what's happening next quarter. You have to kind of zoom out, especially with a company like this, and think, where is it trending?
Yeah.
And, sure, some years might be tough because they're working on new things and they're building out new lines and building out new products. But after that, what happens? And you kind of have to think in that kind of sense a little bit more, I think.